Welcome to Fomo Consulting for your daily AMC stock analysis video on Friday, April 30th. Ladies and gentlemen, diamonds are forever. Our diamond hands, our diamond shares cannot be crushed. They cannot be taken away. We won the $10 war, and they can even keep the change. They can keep the 3 cents because $10 is owned by the retail investor, the diamond hands, and the apes. Great day. So if you find this video informative and entertaining, please like, share, and subscribe. It is a newer channel, and I would certainly appreciate the support. Let's get into the video. First of all, thank you to everyone who has commented, liked, shared, and subscribed. It truly means the world to me, and I very much appreciate it. So, ancient wisdom from Aristotle: through discipline comes freedom. It takes a lot of discipline to buy and hold over the last few months, weeks, and days, as they are certainly pressing the price down, manipulating the price, heavy short attacks, you name it, they've done it, and we've remained disciplined up and through today. We own the $10 level. I could not be more enthusiastic going into next week. So congratulations to everyone. Let's look at the overall market today. Obviously, an absolute bloodbath. A lot of things going on behind the scenes, but overall, Dow Jones, NASDAQ, S&P all down. AMC certainly felt the weight of that, as did many stocks, blue chips. Certainly, the technology sector got hammered yet again, but overall, could not be prouder of the performance of AMC today. So let's look at the daily chart. Obviously, like every other day, we had a quick pop in the morning and then slowly bled off throughout the first half of the trading day. We found our floor yet again at $10. Found that support as always. The apes are holding the $10 floor. Had some consolidation throughout the second half of the trading day until the last really 10 minutes. And then the fight began, right? We were in the 992, 993 range, and we recovered above $10 at the end of the trading day to close at 10.03, down 17 cents or 1.67%, down a bit after hours at the time of this video, but overall fantastic day, and they are clearly trying to keep a lid on this stock from exploding. It is no doubt in my mind, and I think we all agree on that. So this is AMC compared to the 3 major indices throughout the day. Overall, I am very, very happy at how AMC performed. It somewhat mirrored the overall markets as it did yesterday, but it's an interesting look to see how AMC performed against that, and there is quite a bit of similarity between the charts. So once again, just to remind everyone, Thursday, May 6th of next week, 5 p.m. Eastern, is the earnings call. This is going to be a huge catalyst, I believe, for next week. I believe we will run up prior to earnings. I believe next week could possibly be one of our best weeks we've had in a long, long time. So let's look at the what to expect with the earnings for next week. This is right off AMC's website with their 8K filing. They are expecting $148 million in revenue. Analysts are expecting, as an average, between the highs and lows, $153 million. One thing that I really kind of caught my eye was the Q4 EPS. The actual was a loss of $3.15 per share. The average estimate from Yahoo, and you feel free to do your own due diligence, is the expectation that there will only be a loss of $1.26 per share. That's a huge increase. That's a huge improvement, keeping in mind that the company is not feeling any effects in Q1 really from the increased movie ticket sales, the reopenings from Godzilla vs. Kong that was released over Easter weekend. So this is absolutely huge in my opinion. And if you look at the year ago EPS, AMC was negative $20.88 EPS. That's a huge improvement, and it shows that this company is rebounding, recovering, and I do believe the sky is the limit as we move forward just from a business perspective. So again, we own nearly 80% of the shares. We are holding up the company. We are holding up the stock. I do believe we will have a squeeze at some point soon, just my opinion. 20% is obviously retail owned, institutional owned, mutual funds and insiders. So we own this company, we own this stock at this point. So let me point out a few things. Obviously, no one likes 4 red candles in a row, right? But if you look going back to late February, early March, as indicated by the left-hand green arrow, we broke below the moving average as we did have a bullish MACD crossover at that time. And as we were moving up towards that 1450 range, we had 4 red candles in a row, broke below the moving average. If you look over to the right, we did the exact same thing this week. Started up, had a great Monday, broke down below that moving average. I do believe with the current MACD bullish crossover, moving average has been very bullish over the last couple of weeks. We've been trending upwards. I do believe we're going to continue that trend, and I'll show you why shortly. So this represents a couple of months worth of time daily chart. Top is the MACD and the signal line. The last time we had a bullish MACD crossover and ran up to that 1450 range, you could see where we started out, ramped up, kind of tailed off a little bit, and then had a huge pump back up. I believe if you look on the right side, we've just recently had the bullish MACD crossover. I believe we will remain bullish, just my opinion, not financial advice. But I believe it's trending in a very similar pattern as to the early March timeframe. And the price action showed that. And again, if you look at the bottom diagram and chart, you'll see where we had a run up, a quick pullback, 4 red candles, broke below moving average, popped back up the following Monday and continued our ascension up to 1450. I believe Monday will tell us an awful lot about where we stand and where we're going. So I'll be watching that very closely. So again, the red lines represent the channel that we actually traded in this week, from the highs to the lows. And again, this is illustrative purposes. It's not technical analysis, but it's just to be representative of the channel that we are currently trading in this week. And if you look backwards, we have spent a lot of time between this $10 and $11 level, $11.50, excuse me. We've bounced around there for several months now, on and off. So we seem to be very comfortable in this position at this time. So if you look at the last 4 days, including today, I just copied and pasted this red trend line. Again, not technical analysis, but it just shows the rinse and repeat pattern that we've been in over the last 4 days. Quick pop in the morning, quick sell-off, then we bleed down throughout the day, final low support, final low consolidation, until we close, lower. So it's obvious they've been trying to walk this down throughout the week. They do not have a lot of shares available left for those major big short attacks that we've seen in the past, but I do believe that they are slowly but surely walking this down to the price point they want, which was clearly at $10 this week. So again, just interesting to look at from a trend perspective. Again, after 4 red days, everybody has a little doubt creeps in from time to time. But when in doubt, zoom out. We are still very firmly on the trend that we've been in since before the baby squeeze in early January. Nothing has changed with that. As long as we stay above that red illustrative trend line, I think we'll be fine. Again, we have on our 3rd MACD bullish crossover. I do believe next week will be very, very promising leading up to the earnings. So let's look at the short interest today. Let's look at all the short details. First and foremost, there was one more institutional owner that bought in. They are increasing their positions daily. It's amazing to watch that. Everybody's kind of piling in, it seems, in anticipation of what they believe, and in my opinion, will be a short squeeze very soon. We do own 79.2% of the stock. Volume was very, very low today at 26 million, which is why I believe they were able to kind of walk the price down yet again. But we absolutely held strong at $10. And I believe that probably says more on low volume than actually going down 17 cents. I believe on low volume, obviously the price is easier to press down, but holding that $10 line shows a ton of strength of where we are. According to Fintel, whether you believe it or not, 150,000 short shares available and a 15.03% borrow fee. That's Fintel data. Ortex, we are currently at 23.23% of short interest of the free float. The free float on loan is 35.87. All of those numbers the last 7 days have actually trended down just a hair, and I'll show you why that's important shortly. Shares on loan have gone down yet again, 149 million versus I believe we were 150, 151 million yesterday. Days to cover is increasing, however. I do believe we are in the 3 to 4 day, but from Ortex perspective, it's up a good little bit from yesterday at $1.24. Cost to borrow again 13.58. So you can see there's somewhat of a discrepancy between Ortex and Fintel based on the exchanges and different platforms or information sources they pull from. But again, for more than a week now, we are at 100% utilization, which is absolutely huge to carry that kind of utilization for this period of time. So this is what I find very, very interesting. And I kind of did this for illustrative purposes. And I know it's a bit messy, but this shows basically, obviously, the chart over the last 3 months. The trend lines basically cover the 2 weeks, days to cover, cost to borrow, on loan, free float on loan, estimated short interest, all of that data. But you can obviously clearly look at the trends. So I drew a couple red lines, and I think they're significant. Is on the left-hand side is in and around the earnings report from early March. I think it was around the 10th. If you look leading up to that, we had a good little bullish push, right? If you look at the trends of all the short data and short interest, they bailed out of their positions quickly right at the time or right before the earnings. Obviously, we spiked up to 1450 or so. They got out of their positions as soon as the price started going back down just a little bit or kind of cooled off. They re-entered their short positions, and obviously they pressed us down, as we all know, from that high to where we are today. If you look past that point, all of the short data has increased substantially. We are much, much higher, obviously, as you can tell. So leading up to the earnings report next week, if AMC, I believe, exceeds or at least meets the overall earnings and EPS estimates, I believe this will take off like a rocket, especially if they exceed it substantially. But if you look at the trends where the right-hand yellow arrow is, you can see over the last couple of days, the trend has been bending back down, very similar to early March, where it looks as if, just from a trend perspective, they are preparing to exit their positions, which would cause yet another dive, because they believe next week will be a bullish push. We'll watch this very closely. Pure speculation at this point, not enough data on the chart to really be definitive, but the trend over the last 2 or 3 days has certainly been as a decrease, and I do believe they are trying to position themselves for a potential bull run next week due to earnings. So again, you make your own decision, do your own due diligence. I'm just showing you the charts in the Dow. So a lot of big money at play today because we held and closed above $10 at 10.03. Almost 15,000 calls expired in the money. Absolutely huge, absolutely huge. And if you look at that same $10 strike price, they had 10,315 in open interest, obviously at the $10 level. That is why that $10 level was so very important today. And we clearly won. This very much reminds me of a couple of months back on the $8.01 day, right? Everybody's very excited because this is a trend day. This is a day that shows strength. It sets us up very well for the next week. So we should all be very pleased at the $10.03 win today. Big money trades. I thought this was very interesting. Yellow arrows, May 21st, $29 strike call, nearly 1,000 contracts. Those are big dollars with a lot of bullish sentiment behind them, right? So again, just wanted to show you that. You can certainly hit pause and look at it in a little more detail. Again, overall bullish sentiment on the options, nearly 2-to-1, has been in that range for several weeks now. We are certainly in bullish territory from a sentiment standpoint. I just use this obviously for that very reason, looking at the sentiment. So again, from a puts perspective, that $10 line was so very important. This is from my Webull platform. Again, nearly 13,000 contracts were at the $10 strike price. We absolutely won that battle. So let's look at the calls. Obviously, that $10 strike price was absolutely essential today to close at 10.03. 13,000 contracts of open interest in the money, right? Just at that $10 strike. This is on my Webull platform. Again, huge day. One last thing, I showed this yesterday. 3 very different kinds of squeezes. Obviously, you had the baby squeeze with AMC in late January. You have a year-long squeeze essentially with Tesla. And then you have the huge squeeze with GME. As we lead up to what we all hope will be a short squeeze of some sort, there are multiple types of squeezes. I think, again, be prepared for what that's going to look like from all different aspects, but no 2 squeezes are alike. You have to be prepared for all the different alternatives and all the different options, right? So as always, I have skin in the game. Yes, I'm down today, but I do believe we won, and it was money well lost to win and stay at $10. So one last quote, one of my favorites from the book Art of War. Never interrupt your enemy when he is making a mistake. We all know that the shorts are making a mistake. They have no way out. They are desperately trying to find one. They need our shares. There are FTDs galore, shares on loan 3 times more than the baby squeeze in January. Everything is increasing the likelihood of a squeeze, and all we have to do is buy and hold and watch them obviously make a mistake. So again, I think this quote is very relevant. So as always, I hope you found this video informative and entertaining, and if you did, please like, share, and subscribe. It is a newer channel, and I would appreciate your support, and as always, I hope your life is full of green candles. We will talk to you soon. Have a great weekend.